The views expressed on this podcast are those of the participants, not of Reuters News.
U.S. stocks finished lower on the first trading day of the year after opening the session higher. Investors started 2025 dealing with the cross-currents of solid labor market data, a rising dollar, and tumbling Tesla shares.
We'll be talking to President Putin, and we'll be talking to the representatives, Zelensky and representatives from Ukraine. We got to stop it. It's carnage.
The year 2025 is upon us, and it's going to be an interesting year. Donald Trump will soon become president of the United States. Wars are raging in Ukraine and the Middle East, and there's a question mark as to whether or not inflation has actually been tamed. At Breaking Views, our columnists spend the latter half of the year thinking up predictions for the months ahead. We've tapped our sources to conjure up forecasts for the bond market, obesity treatments, private equity exits, artificial intelligence, and more. These predictions are the focus of this week's Viewsroom. Welcome back to the Viewsroom, the weekly podcast that invites you, the listener, into a lively discussion about the top stories of the week. I'm your host, Jonathan Guilford.
And I'm Amy Donlan.
So, Amy, obviously, the old saw about predictions are hard, especially when they're about the future. But right now, it seems like an unusually difficult time to forecast even a little way ahead, right? Just given the volatility that we've seen in markets, given the, let's say, unusual political figures that are moving to the fore. I mean, how has this been kind of looming over your work in the past few months?
Yeah, I think that it's safe to say there's not very many knowns. And we know obviously that Donald Trump is going to be president, and we have lots of theories as to what that might look like. But I think apart from that, we're trying to kind of figure out in all the things that Breaking Views readers are interested in. So that's M&A, private equity, the bond market, as you said, obesity treatments, all of these things, how can we think about them the theme is altered states. In an altered state environment, how do all these things play out? So many of our sources have lots of thoughts on those things. We have tried to kind of weight some of them towards, if they were more interesting, they obviously took more precedence. They got bigger reads in our predictions book. But luckily we have Neil Unmack, who took charge of predictions this year. So not an easy task. And Jeffrey Goldfarb, obviously, as well, very senior editor at Breaking Views, to talk us through these predictions. So Neil, as somebody who, we've all read the book, but you have extensively read the book, what would your favorite prediction be? What do you think is the most interesting prediction that you have read? Maybe it's like picking your children, I don't know.
Sure. Well, all of the views were fascinating, interesting, and very diverse range of articles. But I really enjoyed the one written by Katrina Hamlin on self-driving cars, because I think that's one area where we will see quite a lot of advancements this year, particularly with Elon Musk obviously playing a critical role in the US administration, pushing for more, for his company Tesla to be able to do more in that respect. And already in China, we're seeing some rapid advancements in self-driving cars. And I think as more and more parts of the globe sort of experiment with this technology, not necessarily fully automated cars, but cars that are getting closer to that, then we'll see more and more data, and has the potential to snowball. And obviously the big question there is simply to what extent will car makers be able to effectively pass on or charge for this privilege to customers or not. And the evidence that we're starting to see from China, which is obviously the sort of petri dish for the automotive sector, is that people generally expect this kind of technology to be incorporated into more and more and cheaper cars. So it's still not clear how much of an opportunity that's going to be for car makers, even if it is probably a good opportunity for people in cars.
Right. And that's interesting because it pulls together a ton of the threads we're talking about, right? From AI through to figures like Musk, who is now sort of this oddball right-hand man to Donald Trump, through to the relationship between China, the US, and the rest of the world, and kind of how that affects one of these legacy and crucially important strategic industries in a bunch of countries. I mean, Jeff, when you're thinking through kind of some of the big pillars in the book, is there anything that you look at that you think like, look, this is going to be a big story, whether it's, bond markets trying to get their arms around what's happening with the US government, whether it's, AI and the expenditures there? Like, what is it that jumps out to you from the book?
Well, yeah, I mean, we tackled a lot about AI in the book. And one of the views I really enjoyed, or one of the predictions I really enjoyed, was Jen Saba wrote a piece about how advertising would sort of start to eat AI as the technology gets better. They're going to be increasingly seeking sources of revenue, and pretty much every new technology has leaned on advertising. And so her view is that AI will start to take some of the advertising dollars from other sectors of media, which I think is really great. She's crunched some numbers on it, and I think it'll be a big factor in what we start to see as an industry taking shape.
Definitely. And yeah, again, it's one of those issues where we see a lot of threads kind of crossing over each other. And obviously, all of these are constrained by the big picture issues. I wonder if, Neil, maybe you can kind of talk us through a bit on that, because obviously, the careful functioning of capital markets is undergirding a lot of what we're seeing in AI, whether that's, how it's going to interact with markets like advertising, how far people are going to be able to push developments like self-driving. And can you talk us through maybe a little bit from, let's say, like the credit investor perspective? Because we have a lot of kind of, big unknowns hurtling towards us from a policy perspective and from a broader kind of macro perspective. Like, how is your thinking shaping around that?
Right. Well, I think in terms of the macro outlook, the book does explore, quite a lot of topics, particularly, for example, India. What is the future of India? Does it look more and more like China in terms of growth? But one of the big macro themes, obviously, is the interaction between governments and central banks. So for 2024, people came into 2024 expecting much faster rate cuts than actually materialized. In 2025, what we expect is that obviously since we wrote the book, we've already started to see a dialing back of rate cut expectations, particularly in the US and the UK. And I think we'll see more of that going into 2025. So governments generally are unwilling to rein in their finances and implementing a lot of policies that are essentially inflationary, particularly in the US and again in the UK. So we think even from where we are now in January, we think going into 2025, there is a potential for essentially rate cuts to be less predictable, less frequent than expected. And that ultimately will mean much more volatile bond markets and volatile asset prices.
And Jeff, I was curious as well, because again, I think there's a huge amount of interest among Breaking Views readers and listeners to this podcast about M&A, not least because the bankers involved are hoping that things will take off much more so than they have over the past couple of years, where it's been very light. But I suppose uncertainty, are not that helpful when it comes to M&A, even if there is this sort of exuberance about what Donald Trump is likely to do as US president. I just sort of wondered, what's your crystal ball telling you over in the States about M&A, and where we might see it, and whether it's going to be big and sizable in the way that, that would get people really excited?
Yeah, I mean, I guess to start, in the interest of full disclosure, I should say that I actually expected 2024 to be quite a big year, because I felt like there was a lot of money pent up that was ready to be deployed. As it turned out, the dollar volume of M&A only increased globally by 10% to about 3.2 trillion. And interestingly, the number of deals actually fell to an 8-year low. Those are according to some numbers from LSEG that we've seen. But in 2025, it's sort of like when the deal-making community is a little bit more exuberant. The strategists over at Morgan Stanley have predicted a 50% uptick in deal volume this year, which would obviously push us back close to $5 trillion worth of M&A. And a lot of that is on the back of the idea of a laxer, well, it's two things. It's a laxer regulatory environment under Donald Trump. And it's, I think, the scale of money that is now being squeezed in private equity that needs to be deployed, because another year has gone by without nearly enough deals being done, and they haven't been able to get money back to investors quickly enough, and that's got to pick up the pace. So those two things are happening, and I guess one of the things that we explored on the regulatory front was sort of, if you take the premise that antitrust oversight will be looser under Donald Trump, then there's some deals maybe that were kicking around that got sort of put on the shelf that may be back on the table. We've already seen it. This week we've had Getty Images announcing a deal to merge with Shutterstock, which is a deal that would probably not have been announced 6 months ago. And it looks like they're going to test the regulatory waters. One that we kind of thought about was, Google had thought about doing a couple of very big deals last year, and then ultimately they did not go forward, in part because big tech was the most scrutinized industry under the Biden administration. And one of the ones they thought about was buying a cybersecurity company called Wiz. And, I'm wondering if that deal maybe comes back onto the table now.
It's a really interesting one on that front, right? Because there are all these tea leaves people are trying to read. And I know that we've written about, will big tech continue to be kind of strictly scrutinized under a Trump administration, right? Because you have folks like Vance who seem to share a little bit of the kind of Lena Khan era hostility to that sector. However, once you step outside of there, it feels like the possibilities definitely they couldn't get worse. So presumably they must get better. And I know, Amy, obviously you've been thinking a lot about the obesity drug craze, and you wrote a piece that kind of touched on the possibilities coming out of that. It's another one of these kind of big themes that doesn't really impinge on all these questions about big tech. I mean, what do you foresee there?
Yeah, I mean, it's another massive year for weight loss drugs. 2024 was, and I don't know if any of you watched the Golden Globes, where, the host said it was the year of Ozempic, looking out at the crowd of extremely slim celebrities that were looking back at her. So the upshot of Eli Lilly, which is, makes Mounjaro and Zepbound, which are the diabetes and weight loss drugs that they have, and Novo Nordisk, which has Ozempic and Wegovy, is that they are awash with cash, and they are going to build up huge stores of cash by selling these drugs. And it's, what do they do with that money? And the truth is, they are on a bit of a limited run with this, because they have patents. For example, Novo Nordisk's patent runs out at the start of the 2030s, basically. So they only have a certain amount of time to gather up as much market share as they possibly can in weight loss and diabetes. So it would make sense, I was suggesting, for them to not only expand in these markets, because there are other companies that are coming along with promising weight loss drugs that they could buy up, bring them into their portfolio, and they would get even more market share. But as well as that, for Novo Nordisk, for example, it makes sense for them to diversify a little bit, because they are very much focused now on really two diseases, which is diabetes and obesity. And there's actually now quite a big overlap between those two, because you don't really get type 2 diabetes without obesity. And if you're treating obesity, what happens to type 2 diabetes? So we kind of gave a few kind of examples. There's this Argenx, which is a big, one of the big biotechs that they could buy, which would be a really, really large deal, a big pharma deal. And we used to see very large pharma deals, and then we just started to see companies doing bolt-ons. And so I think they could be the ones that lead some pretty big M&A. And as I said, they don't need debt, they don't need equity, they don't need much at all, because they have an awful lot of cash that they can play around with.
But I guess it's quite a risky proposition if you're an investor in one of these companies, because they have a huge incentive now to do deals, or the alternative is to return that, whatever it is, $80 billion to investors, which they clearly don't want to do.
Yeah.
So there's clearly a risk of overpaying there.
That's absolutely right. Yeah, there is, and there's such a charge into this market as well from everybody. And like AstraZeneca, Pfizer, Roche, everyone is trying to either buy up small biotechs that are making these drugs or develop them themselves. So yeah, there's definitely a premium on these companies that are making these drugs. So yeah, there is a risk that there's a bit of a fight for them as well. So yeah, definitely an interesting space to watch.
Yeah.
Right. And if you think about it, right, you look at these kind of areas, like the not only the kind of blue chip investor rush into things like the Ozempic wave or, let's say Tesla, companies like this, there's also like that whole quantum of kind of dark matter in the markets, right? Which is the meme stock craze. And I know Karen obviously was, our colleague Karen wrote a piece about OpenAI and whether it could try to harness that to go onto the public markets. And I mean, you seem to see like this insatiable appetite for cash to move around into these really exciting places. I mean, I don't know if Jeff and Neil, like you have thoughts about kind of what that means, not only for OpenAI and whether AI is finally going to start like really tapping the public markets in a real way, but also stuff like, we've mentioned Elon Musk. SpaceX is still out there. It's still, it's beginning to move toward profitability. It still has like a vast amount of capital expenditure that is kind of foreseen to expand out that gigantic network. Like, how do you foresee, I guess, like the success of these companies that are kind of building out these new areas of the economy, and B, kind of, I guess, how markets will continue to treat them?
Well, I mean, one thing on the SpaceX question is quite interesting. I mean, our colleague Rob Siran wrote a really fascinating prediction about SpaceX and sort of took it looking at comparing it to Tesla, which of course, like as of now, has like something like a $1.3 trillion market cap. SpaceX is valued privately at, I think in its last fundraising round was something around $350 billion. There doesn't seem to be any real rhyme or reason for these valuations. They're both highly speculative companies. But if you take a step back, as Rob did, and you think about it, I mean, in a way, SpaceX ought to be valued quite a bit more, by a lot more than where it is now, or has the chance to get there because of Starlink, which is ultimately this shaping up to be a monopoly satellite service that's operating in over 100 countries. And whereas Tesla is, it has a lot of competition certainly in electric vehicles, and formidable competition at that, like companies like BYD. But, SpaceX is massively profitable, looks like it's going to be a monopoly, and is a whole new area that's much more, actually feels more tangible than some of the speculative stuff that's hovering around Tesla. So, I mean, you could see that business. I'm not sure it's going to go public in 2025, but you could certainly see that business sort of becoming more valuable or as valuable as Tesla in the years to come.
And it's interesting because, of course, as you say, SpaceX is private and Tesla is public. And one often thinks that the private markets are where the froth is at the moment. And yet, at least from that valuation perspective, it seems clearly that Tesla is the more overvalued of the two. And, that's potentially another reason why someone like OpenAI may ultimately decide it needs to go public, that it's kind of tapped out of the private markets. And there is still a capacity to get, rosier valuations for certain companies in public markets.
I mean, on that point, also, I would just say that, last year, towards the end of last year, in 2024, we had a company called Databricks raise $10 billion in one go, which equated to something like 25% of all IPO proceeds over the year. So, I mean, there is, to your point, Neil, like the private markets are definitely where the action is. And there does seem to be some expectation that the public markets will regain their mojo, at least in terms of IPOs. We've certainly seen 2 consecutive years of the S&P 500 going up over 20%, which is, sort of amazing. But as you say, the private markets have really been where the action is.
Right. And of course, that conversation about, whether the action is in private markets or public markets, writ large, it still depends on this broader notion of stability, right? And the ability of markets to kind of continue allocating capital without the wheels coming off. And I think a big question about that has been like, what is going to happen to the bond market under a Trump administration, right? Because, a priori you would think, okay, tax cuts, yes. Spending cuts, not so popular. Maybe that doesn't actually happen. You get a really difficult U.S. fiscal situation. You have tariffs thrown in there. You have a lot of kind of chaos with exchange rates. I mean, how are you thinking about, I guess, the potential for really, extreme outcomes here?
Yeah, I mean, I guess if we circle back to what Neil was saying at the beginning about the the conflict we're going to see between sort of central banks and legislators, lawmakers, politicians. It's our colleague Gabe Rubin down in Washington, who's obviously going to be very busy for this year. Took an interesting point, which is that Trump, one of the hallmarks of Trump's MO is sort of just bullying his way through everything, and the bravado that he carries himself with through, as we just saw in the House of Representatives and choosing the speaker, and he just seems to always get his way in that way. And I think, one of the things Gabe was saying that the bond market is not so easily bullied, and he's got these fiscal policies that at least being discussed about tariffs, tax cuts, deportations, all of which are inflationary on their face. And so, how is the United States going to keep borrowing in the face of that? And, my sense is, and I think Gabe's is as well, is that the bond market will push back on all of this. And ultimately, even if Congress is willing to go along with it, and CEOs are excited about the idea of tax cuts and, all of this sort of animal spirits, that the bond market will have its say in 2025 about exactly how much the United States is, able to do.
Right. Okay. And so obviously a lot of this very future facing. We're thinking about big heady topics from AI to self-driving to whether the capital markets will collapse. And there was one piece that I did just want to touch on. Amy, I know you edited a piece by our colleague Jennifer about whether smartphones have actually reached the crest of their popularity and whether we're going to see a kind of, let's say, not exactly return to nature, but a return to the brick phone. I was wondering if you could just expand on that a little bit for us.
So yeah, I mean, we can all probably in this demographic of this podcast cast our minds back to the Nokia brick phone, which was very limited. You could text, you could ring people.
You could play Snake.
Play Snake. I loved Snake. Used to eat the battery though. But yeah, so it was this very simplistic phone that just allowed you to communicate. And I think what was so interesting about Jennifer's piece is I think that a lot of people, when you speak to people about smartphones, social media, they're very concerned typically about their kids and how sort of addicted their kids are to social media, the dangers of mental health. And there's a lot of surveys and a lot of research now being done talking about these dangers. And I think that it's not so much the demand from the young people is that they don't want a smartphone anymore. It's that the schools, the people that are in charge of the mental health of these people are going to make decisions that bring back these brick phones. And you're already seeing that. So Eton, which I think one of our colleagues on this podcast went to, they are actually offering Nokia brick phones to their students. And there's lots of different schools that have banned phones altogether. So you can't bring a phone into like many secondary schools. Primary schools have done that as well. So elementary schools in the US. So this is obviously a problem if you are Apple and if you are Samsung, which are trying to sell smartphones. They're continuously trying to do this amid Australia banning social media. So banning social media to under 16s. So what Jennifer was discussing is that there is a choice for these companies. They can try and sort of address this issue, which is come up with very restrictive phones themselves that actually have proper controls on them. But the problem with that is that they're probably going to be difficult for the parents to administer and maybe easy for the kids to work around. And an easier thing to do, the sort of upshot, the final solution to this is really that they might just end up with saying, it's much easier for me to give you a brick phone. You can ring me if you need me. You can text me if you need me. And you don't need anything else. So that is sort of the interesting. And I think it's a sort of societal change, which, as I said, I think that you have sort of reached this sort of peak smartphone where people are starting to see that there is quite a big danger for young people using these devices.
Got it. Okay. So altered states will see us undo the Paleolithic revolution in technology. And with that, thank you so much, Jeff, Neil, and Amy, for talking us through Breaking Views predictions for 2025.
Thanks.
Thanks for tuning in. This podcast was produced by Oliver Tashlich in London. You can listen to a new episode of The Viewsroom every Thursday on the Reuters app or your favourite platform. And don't forget to tune in to our sister podcast, The Big View, every Tuesday, as well as the other great podcasts from the Reuters team. If you like what you heard, please follow The Viewsroom and let us know what you thought. And check out our views on the biggest stories in business and finance every day at breakingviews.com and Reuters.com.